I got a call from a family office with a small hedge fund allocation last week, and they were asking the question, is there a way to use Phenomenal to see how diversified my portfolio is? We have this small hedge fund position. We've had it for a number of years, and we'd like to see what kind of diversification benefit does it have. But I kind of reading into the question and knowing how overheated the market is, how do they stay invested in growth, which is what's going through my mind. Now, their follow-up question is, in this hedge fund allocation, we've been using cash as a proxy, but in reality, we know about HFRI. Well, I said, we don't have HFRI on Phenomenal, but we do have Phenomenal long short. That way it could use as a substitute. I said, what else do you have? Well, we've been collecting the returns monthly. I was like, that's even better. Let's use the real thing. And Phenomenal has a return analyzer that we can load those returns, and then we can insert that in your portfolio to see its true impact. My guess is that you're trying to build a scenario to see how big an impact if you increase the weight of that hedge fund. I think the underlying question behind all of this is that they want to stay in growth in what is an overheated market, but without the transparency, to be honest, not having a baseline to quantify it probably put them in a disadvantage. So I said, here's an opportunity. Let's use the return analyzer. Let's get the data in. And we did that. And it shows the diversification benefit because ultimately they want to go from that 10% allocation to something greater as the markets unfold. We'll see, but they want to be hedged in this market. Hi, I'm John Regino with Finominal. We are an investment analytics software platform that provides insights to family offices, advisors, and distribution teams. I'm going to walk you through the use case that came up last week regarding how diversified a portfolio is from a family office with a small hedge fund allocation. I mentioned they wanted to use HFRI. We didn't have that. We have the Phenomenal indices. What was better is to use the data itself, and under Tools, under Returns Analyzer, we have an ability to bring those hedge fund returns that the family office was collecting. I had the file that's anonymized, so you can see all the returns. We loaded that into Returns Analyzer, and just to quickly show you, we loaded that. Now it's a ticker that's associated with this particular hedge fund. I called it HF. Once that's saved, I take it into a larger portfolio. I'm going to call it combined portfolio. And you can see HF2 is now a position. They had our hedge fund as cash. So I replaced cash with that 10% weight. And so now we're going to take those attributes from the data and we've assigned it to this portfolio. Once this is saved in the dashboard, take it into Portfolio Analyzer. And what you're seeing in Portfolio Analyzer is a combined portfolio, in particular looking at diversification to establish that baseline diversification score and look at metrics like its correlation to S&P 500 and so on. You can then adjust those weights to what they were looking to do, increase that position, but they have to reallocate their portfolio. So if they want to take it up to 15%, they just gotta have to move those weights. Thank you for exploring this use case with me. If you have any questions, other ideas, or ways you'd like to experiment on the platform, please reach out to me and please like and subscribe, and I'll see you next time. Thank you.